Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, October 31, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? A lot of stuff going on. Everything from where are they now from a bigger picture perspective. We have the Kabuki Theater FOMC interest rate announcement and Jerry's presser tomorrow on Wednesday afternoon. And then we had something pretty cool today in the live trading room and inside the numbers that I'm going to point out. It turned into, meaning the trade, a double whopper with cheese. I'll explain in detail with pictures. Let's start with what's jumping off the page on the daily chart. If anything, we're in the midst of a bounce in a continuing downtrend until we're not. Can they move higher? Yes, they can. Will they move higher after the Fed announcement? We don't know. They could certainly pull the rug out and send the markets down on another leg towards what? Towards the trend line down here after the Fed. We don't know that that will happen, but that's an awareness of something that certainly can happen. We've seen that type of occurrence over the last several Fed announcements, Fed meetings, Fed or Jerry pressers type events. What happens if they run them up right into or around the Fed meeting? Where is that area where we're likely to find overhead resistance? Well, for starters, we're going to say between 421 and 422, and that's going to become more clear in a few moments. For now, on the daily chart, it's right around the top end-ish of this breakdown candle underneath the 200 period moving average. Maybe they peekaboo, maybe they run a test of it, maybe they spike a little above it, but up in this zone is overhead resistance. Now, we know the type of situation we've got in front of us with the FOMC Jerry's presser situation, where they can certainly spike above or pull the rug out like we talked about before. And because of that event, it could be to a larger magnitude. These are the numbers barring any kind of massive spike up or down with the Fed announcement. We're talking resistance 421 to 422. I'm going to show you a little more detail on that in a little while. Just so we get another look from a longer term perspective, the weekly chart, there's your trend line. From a weekly chart perspective, it's not that far away, and above on weekly close, the last breakdown candle high, all the way up at 424.82, we'll call it 425. That essentially wipes this trend line off the table unless or until they're back below or inside of that candle. Weekly closes, Friday closes. This is longer term stuff. Monthly chart being supported at present by the 20 period moving average. They ran a test of home base on the monthly chart, bounced off of it. That's garden variety stuff. Keep this in mind. All charts act and react the same way. Doesn't matter whether we're looking at a 5, 15, 30-minute chart, weekly, daily, monthly chart. Makes no difference. All charts fundamentally act and react the same way. Yesterday, we talked about another important place. That place was the last breakup candle low in the sequence. The low is 416.79. This is based on a monthly close, which just happened today, the 31st. The blue horizontal line represents 416.79. And you can see more clearly on a daily chart, she closed above that place on monthly close. That can't be a negative. It doesn't require a positive outcome, but can't be a negative based on that type of circumstance. Closing above the monthly chart breakup candle low. They ran a test of it, included the 20 period moving average, bounced off of it, closed above that low. That's generally speaking a positive signal. We're going to do this a little bit different tonight from an inside the numbers and live room perspective. I'm going to let you read the notes in a moment. We'll go over the stocks on the move. But we're just going to paraphrase the whole thing. I'm going to show you exactly what happened this morning, explain it, you'll see the outcome, and it'll all make sense after the fact. Forget this shenanigans tail candle. This is from yesterday. This really does not exist. This is what's called an inverse head and shoulders pattern. Over here on the left is the left shoulder. The head comes down here. There's a right shoulder, a dipsy doodle, and if closed above activates the inverse head and shoulders pattern, the exact opposite, the flip side of the daily chart head and shoulders regular way pattern that we talked about for the last several weeks. Remember, technically speaking, by the book, that one failed. This one did not. We were on top of this in the live room. I picked this up this morning, didn't see it yesterday, and here's what we did with it. Inside the number members were told 415 is support. That coincided with the line this morning. We did a hand-holding session in the live trading room. This is the first thing that we talked about this morning, and here was the layout. I said, today's going to be a little different. This could be a longer term, meaning from a day trading perspective, than just a scalp where 5, 7, 10 points, 15 points. We're looking for more out of this. That's how we started the day. Now, right of the vertical is today's activity. So here was the layout. If they come down to 415, which coincides with the trend line, and that holds not on 5 or 10 or 15 minute closes, the challenge was hourly closes. They can dipsy doodle below, but if they close back above on the hourly close, it's good to go until or unless she closes back below. So the market opens up. The opening print today in this first 15-minute candle of the day was 416.18. We had a bull pivot at 416.15. So we use this in two ways. This is all in the notes. It's all laid out first thing in the morning. Above the bull pivot is the bull case for another leg higher to where there was a gap to be filled at 417.60. She did that, plus went a little higher. What I tell traders in the live room all the time is it doesn't cost you anything to hold a trailer. Once we put a profit in our pocket, it's a free ride, a risk-free, emotionless trade. The objective was come back down to 415, test the trend line, buy them up, wait for them to go. That was basically the layout. If she closed hourly below the trend line, it was going to be wrong, and there was a whole different thing going on. This was the layout this morning. This is what happened. It took a while, but nonetheless, it worked like a charm. Traders that bought the 415, give or take, they were taking profit at 416.15, which was what? The bull pivot. You take profit at resistance and you let the rest go. They came back to test the trend line a couple of times. Guess what? Traders did a play it again, Sam, and this was not a first time, best time situation. This was a test the trend line. As long as you stay above, it's going to work. Here's back to the hourly chart. You see this hourly test candle in the first hour of the day. The second hour of the day, they tested it pretty much on the button. We had traders buying it twice. First hour of the day, second hour of the day. Play it again, Sam. The rest is, as they say, history. Pause the video, read the notes, go back to the chart to double check the work. 416.15 is our bull pivot for higher prices and an attempt to fill the gap up at 417.60. Pause the video, read the notes, go back to the chart to double check the work. One such place is close by at the semi-fat round number of 415. Sound familiar? That was the top of the neckline. This is a support place where they can bounce right back. Pause them, read them, go back to the chart to double check the work. I gave you the whole thing. I just want to show you it was all in here. There you go. Nice trade. That was the initial bounce off the trend line. We have some interim numbers here, and they kept above the trend line with one more test. 415, give or take, is important. Now watch this. Here's a picture of the thing. This is the inverse head and shoulder pattern. They're eating time off the clock. This was posted for Inside the Number members. The objective was to ride it up as long as they stay above the trend line. It was all explained in here in black and white. including red and green. Nice trade for traders around the horn. A lot of profits running wild today. But wait, there's more. We had 4 stocks on the move today. 2 did not hit their entry objectives. 2 did. Tesla just missed, CAT hit it, and WDC hit it. Let's take a look at the charts. Before we do, I almost forgot. I want to point something out. There's a target. Just like a regular way head and shoulders pattern, there's a target even for an hourly head and shoulders inverse pattern, and that target based on the neckline, based on the low over here, not this low, but this low, and you do the quick math. I show you how to do this in the course Lazy E-mini Trader. It brings you to what? Around 421, 422. Remember that number from earlier in the video? Let's just split the difference and say 421.50. Isn't this the breakdown candle in the high-ish area, in the upper portion that we were talking about before? What happens is markets like to run tests of breakup candle lows and breakdown candle highs. They don't always get to the high. They don't always stop short of the high or the low. But in the general vicinity is where the magnetic thing takes them. About CAT getting a buzz cut at the open. 226.65 was the number posted. 0 dark 30. They bounced off of it. They gave you, depending on how much you wanted to take, up to about $4.50. Certainly more than the required base hit. Tested the number, retested the number, dipped below the number. Nobody's in this thing in the afternoon. This is a morning trading business. Nice trade in CAT, participation in the live room, and other. You never know which ones are going to give you the rocket ride. WDC getting a haircut at the open, closed up here yesterday, opened down here today, came into the number, spiked it, reversed back up in the other direction, almost filled the gap, gave you a whopper as much as you wanted. We had participation in the live room with trailers. It doesn't cost you anything to hold a trailer. You take something off, you put it in your pocket, base hit, risk-free, emotionless trade. You can get the rocket ride. You never know which ones are going to give it. Nice trade in WDC or Western Digital. What's going on over in Camp IWM? They're still hovering around that 164 area, trying to find some semblance of support, carve out some kind of an interim low, or just run sideways for a while, eat some time off the clock. It's in a downtrend. It's just a bounce off the low from the other day in the same downtrend, but they can bounce higher if everything gets a rising tide lifts all boats situation. Wild card is FOMC, Kabuki Theater, Jerry's Presser. Transports, or should I say folks down at the transportation department, getting a bounce along with the SPY today. They were down first. They recovered. Bounce in a downtrend, but markets do bounce. It can extend into a mini squeeze operation. We don't know. We've got the wild card tomorrow. The Q people, same routine. Bounce in a downtrend. Wild card coming. This was one of those days where everything got a minor lift, but our focus and the same pattern did not exist in the Qs, but we got our lift from the inverse head and shoulders pattern in the SPY, in my opinion. Just a bounce in a downtrend, nothing more, nothing less, until it is. Got to get above 357 to break the chain, and then into and above those moving averages around 360 in team Qs. Nice bounce in the financials. XLF up over 1% today. Relative strength in the financials. They were throwing the baby out with the bathwater last week. Who wants to buy it down there? Here they are bouncing up in the other direction. It's a bounce in a downtrend. If they can get back above that 20-period moving average, they can break the chain. Similar day for SMH. However, they're riding the 20-period moving average. There's nothing bullish here just yet. If they hold the 200-period moving average, they can get a lift off of it. However, they're going sideways. They're eating time off the clock. We have to be the umpire calling balls and strikes. The SMH is building energy for another move lower if, in fact, they do not, meaning do not get away in the upward direction from this 200-period moving average. If they hang out down here, it's going to give way. Wild card, Jerry's Presser, Kabuki Theater. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.